Hello and good morning, listeners. Welcome back to Almus Market Mornings, your quick fix for the global financial updates with Jayaram Krishnamurthy. Now, folks, we've had the ECB updates yesterday, wherein the ECB chair Lagarde mentioned their concerns about the growth. And JK, I'd like your two bits on this ECB update. And meanwhile, US weekly jobless claims rises, flagging the ongoing jobs concerns for the US economy. And quite interestingly, JK, we also saw the metals move lower after the Chinese updates. So, could you just touch upon the recent metal moves along with the Trump's statements and its reception for the market participants?
Hey, good morning. Yes, we had the ECB announcement yesterday. Rates unchanged as widely expected. But the key takeaway was that they remain data dependent. September meeting is still open for a rate cut, and their assessment of the economy is one of weakness. They also see inflation hovering around these levels for the entire year of 2024. On jobless claims, it was higher than expected on the weekly basis, but it was affected by hurricane, so not much influence from that. However, if you look at the continued claims, which indicates people who went out of jobs and not found one again, has increased from 1.847 million to 1.867 million. The other important indicator was the fully fed manufacturing that came stronger than expected at 13.9. The order book was good, employment was good, but prices paid declined. But what the market looked at also was the forward-looking leading indicators that fell for 0.2%, following 0.4% decline previous month, and in the first half of 2024 it has fallen by 1.9%. And these declines are fueled by gloomy consumer expectations, weak new orders, and negative interest rate spread. And the conference board has actually said that the June's data suggests economic activity likely to continue losing momentum, and the possible huge GDP growth down to around 1% in Q3 of this year. Now, the series of weak data and softer inflation, which has taken the US yield substantially lower, has now finding a base with 2-year and 10-year already having fallen 80 bps and 50 bps respectively. We are seeing some profit taking and also weighed down, the prices being weighed down by huge issuances that is coming from the treasuries. On the markets, all three major indices in US were down, where initial sell-off of tech-heavy Nasdaq early in the week has now become a broad-based selling. That's what was seen yesterday. Once again, it is uncertainty of policies going forward that's leading players to take a profit. On currencies, euro continues to retreat from its 1.0948 high and got some downside momentum after ECB decision. But the broad euros move recently was really not so supported by fundamentals, because we still have the uncertainty on the political front. But we see the broad dollar strength, getting a bottom, rather broad dollar strength sustaining now as the risk assets are selling off. We also await the full details of the Chinese Communist Party scheduled today. But initial indications are that they are focusing on domestic growth and also on a high-end technology, and market wants to see hints of macro policy changes and also the rate cuts, which has been eluding. Now, for yen, the higher yields are once again taking the dollar yen higher. Now, market continues to fight the authorities who want yen to strengthen, but now it's up to the policy meeting of BOJ, which will be in the last week of this month. The latest inflation number, which came lower than last month, does not support any change in their policy. So yen it continues to remain somewhat on the weaker side, but definitely below 160. That's become a line in the sand right now. Not much of a data from US tonight, but we head into next week packed with important numbers: flash PMI, GDP, PCE, core inflation, and an eye on the politics in US and Europe as well. Now, rupee closed almost at all-time low, with persistent demand from PSU oil and importers. This was slightly surprising because dollar had tended to weaken at least in the initial part of the day yesterday. But it's down to, rupee has been catching up a bit with the weakness of the other currencies. And again, whether RBI lets the rupee to fall further depends on whether we have outflows related to stock markets sell-off. We head into the budget with the markets at all-time highs. A lot of good news being discounted. Is it going to be buy rumor, sell fact after the budget is something that we are going to see. In the meantime, if outflows are there and dollar continues to strengthen, the central bank may be aligned to further weakness, and we may see another bout of weakness in the rupee towards 83.80, but not too much beyond that, at least as of now. Thank you.
Okay, JK, that was good. And JK, what about the metals move? As we mentioned, what have you been observing with respect to the metals move on the lower side?
Yes, Shikhar. Yeah, definitely. The metals have really crumbled in the last few days. This trigger has been coming from the Chinese data, which came, much weaker than expected, particularly on the GDP. Coming at 4.7% versus 5.1% initially thought. Then we also had Eurozone data, which is now coming weaker. Industrial production was much weaker. The forward-looking ZEW sentiment was also weaker. And we all know that the US economy has also been showing signs of weakness. So not much fundamental support for the metals, particularly the industrial metals. In fact, we have seen even the precious metals taking some profit-taking hit at the highs. So I think we are lacking fundamental support for the metals. That is why you have seen a sharp move down.
Okay, JK, that was quite good. And yes, folks, the ECB update, as JK mentioned, was primarily on the course that they still remain data dependent and also open to rate cuts in September. But interestingly, the euro continues to retreat, and it's kind of giving signs that the possible dollar weakness that we've been seeing is bottoming out. So it only time shall tell whether this was the bottoming out in the recent dollar weakness or not. But at the same time, the Philly Fed manufacturing updates, as JK mentioned, were on the positive side. For the US, again, the major three indices all on the equity front were down yesterday. So some sort of profit booking along with the uncertainty on the policies were the major triggers for this move. On the rupee front, as JK mentioned, the possibilities remain towards 83.80, but at the same time, the narrow range continues to trade for the domestic market. And that's not it, folks. Although this week was, relatively easy on the data front, we have an action-packed week coming up next week. So it's good to have the monsoon prep you up for this particular weekend. So as we hit the next weekend with a bang. That's it for today, folks. I'll close the session today by saying thank God it's Friday and we enjoy the weekend. Thank you so much for listening. We'll come back again on Monday.